Good morning, everybody. Happy Wednesday. It's Fed Day. Interesting times. No, I think we're going to be, I don't know, we'll probably be fine for today. It'll be a noisy day. Unfortunately, it's one of those days we talked about, spent a lot of time on it yesterday. We know this trading daily profit play that prices and implied volatility are very sticky today because most of the drama and most of the volatility, most of the direction, most of everything is going to happen from 2 p.m. to 4 p.m. So any morning trades that are filled, for example, are going to have to sit typically for the entire day. Um, the only way that's not the case is if you were willing to go a little bit wider on your daily profit play, like 10, 15, 20 wide, and obviously take on more risk, but that way you're not getting the sensitivity that you would have on the buy side. So anyway, we'll talk about that this morning. Look at our key levels. I still have that trade that we posted on Monday, those two broken wing butterflies. We'll see if we have some volatility that kicks in today or tomorrow to kind of test some highs and lows. This was just, I was looking at JPM yesterday. Here's the screen share. And we'll get into our daily profit play plan. All right, chat is open. Okay, very good. Give me 1 second here. All right. Also, my plan for the day is to start trimming some positions. I think I've got a lot of good looking trades into the end of the year. Waterfall income, we're still sitting at a lot of trades open. I think as long as I am closing out trades that are strikes above the 6,000 handle, I think I might just want to take those off the table and take the profit. And then anything below 6,000 would be looking for full profit, potential profit traps into those late December and January expirations. So look at that this morning as well. Also want to take some profit on several positions running for Project Options Edge. JP Morgan had an interesting sell off yesterday. We had like 56% of stocks advancing yesterday, 55.3, big drop in JPM. So the first thing I looked at with JPM was, okay, is this all financials? No. Goldman Sachs are kind of, if I'm looking at like the health of the investment bank world, JPM and Goldman Sachs are the two that I'm going to look at. Goldman Sachs is up to all-time highs. JPM had a pretty nasty reaction yesterday, so I addressed that in my final hour YouTube session. And it could be a range trade. I mean, it obviously could pull back a little bit more. Um, to what degree? It's like if it's range bounds, we have support here, we have resistance here. This seems like kind of a 1 day sell-off that it looks like a bit of an overreaction. If it's the start of something, okay, fine. So maybe a high to low, maybe a breakout this way, but it's like that's a big move. That's a big move for JP Morgan with discounted cash flow up to like $366. It's only like a 15 times earnings. It's not overvalued, you know, and I don't think they're that exposed. I think this has something to do with um, Marianne Lake or something. I don't even know what that was. After CEO, oh yeah, that was the CEO. Projected 2026 expenses at 105 billion, 9% above expectations. So higher expenses. Okay. So is that just like, oh, they have more expenses? It's going to be, and that's a weird time to have like this news break, but maybe their earnings aren't so hot coming into 2026. Everyone's talking about financials doing really well in 2026, and um, I think we still have a backdrop that's pro finance. Will deregulate a little bit where they can use the reserves a little bit more loosely versus having them like we saw back in 2023, the regional bank crisis. You got duration and bond exposure that you don't necessarily have to have anymore. So Anyway, talk, talk, talk. Let's go to today. Give me 30 seconds. Okay. So plus minus on the day. Let's go SPX. I'm guessing we're going to have like a 40, 50 point expected move today because of FOMC. Plus minus 42.73. So a little bit higher than what we've been seeing. A lot of that volatility is likely going to come in the afternoon. 42.73. Okay. So for Monday, so the volatility has shrunk a little bit. We had like a plus minus 99 on Monday. We had a plus minus 108 on Monday. Now it's down to 88. I'm still curious if the market's going to push. We're at 68.40. My Broken Wing Butterfly was sitting with a 7,000 strike. I don't think we're going to get there. And the other one was sitting at like 66, 65. I don't think we're going to get there either. But it's still pending. These two Broken Wing Butterflies from Monday. If we get a decent push to all-time highs, that's 69.20 and change, a drift into the end of the year, or I'm sorry, well, end of the year, yes, but even into the rest of this week, maybe enough to get us filled for, maybe $1, 25, and I still like the trade. If we have a terrible, experience this week with the Fed and then the market rallies back through the holidays, that's similar how last year played out. 2024 December, it was a directional dump during FOMC, and then the week after was, I want to say Christmas was the week after, and we're not quite there this year. The way the schedule is we have FOMC this week. We still go through next week, full week of trading, and the rally ensued like during Christmas week. Let's go back here. Let's go SPX and go to December of 2024. This one candle, and it should have been like the 18th. So there's December 18th, 19th, 20th. So we had a Wednesday sell off, Thursday, a bit of a follow through to test the lows. Friday, the market ripped up hard, and the next week was right into the holiday stretch. So we went 23rd, 24th, market still open, and we came right back up to test, what the FOMC had pushed down in the market. And then it was just chopped from there. So does that happen again? Maybe. I don't know. I mean, is the Fed trying to bring some pain? Probably not. Never intentional. But I mentioned this yesterday in the afternoon. I mean, we are looking at like a potential divisive Fed where there might be a lot of dissent. Like every month, it's like, okay, who says what? Is it everyone is in agreement? I mean, that's one thing that Powell had most of his term or his Fed chair. Everyone was in agreement and consensus on whether they're cutting rates or hiking rates or whatever type of policies they're implementing. Um, Now with Trump in the picture, Trump and Besson in the picture, picking a new Fed chair. I mean, this has been the controversy all year that we've had like this shadow Fed because whoever is picked is going to come in and kind of shake things up and do the bidding of the current administration, but also try to be a Fed chair. And there's a balance between, who's officially appointed Fed chair and then the academics that are still considered members. Um, I don't know. It's weird to see that is the Fed going to be just doing the bidding of the administration, and is it good or bad? I mean, core PCE, I think I can bring this up. Core PCE. I want to look at the year over year. One of these. Quarterly, month over month, annual change. This one. Okay. So forgive my moving averages here, but the blue line that I'm highlighting, this is core PCE at 2.8. Core PCE annual change at 2.8. The Fed funds rate is coming down to what should be a 3.5 as of today. Should be a cut like 89% chance. Yep. So we're going to cut to 3.5375. Okay. So change this to 3.50 to 3.75. That's going to be the Fed funds rate window. And we'll move this down 3.50, 3.75. And the argument is that this is the Fed funds rate after today's rate decision. This is core PCE, which is still the preferred inflation gauge, and we are still above it. So even if we bring rates down to 3%, obviously we need to make sure like this isn't going to go above, right? Let me see if I can overlap this. We'll go down here and we'll timestamp this for December 10th. I'd like to overlap this with Fed funds rate. Let's change that. Sorry. So Fed funds. There we go. Let's change that to I'm just going to change the color so it's not confusing. All right. So is this where we're seeing, well, when Fed funds rates are typically getting cut, let me find this. Okay, so Fed fund rates are being cut, PCE follows. Fed funds rates are being cut, PCE follows. Fed funds rates are getting cut, PCE follows. I mean, that has been pretty true. I guess what makes this a little bit dicier is when the Fed funds rate is cutting and we see a spike up in unemployment, which has been happening a little bit. So anyway, listen to a little state of the markets thing last night. Had some interesting data. Doesn't necessarily change. I mean, I just think we're gonna have volatility in 2026. Good, bad, and different. I mean, I think the market's going to be a buy the dip. If we have a 10, 20% correction, we probably participate in the dip. This bubble situation is, I don't think this is a bubble. I think that we could get into a bubble. I think that any type of, 10, 15, 20% flush, another like weird buy the dip, hated bull rally type thing could happen again. um, it does make the market feel very manipulated. If we had another kind of repeat of 2025, which was just like, yeah, the market flushed down, 20%, and then it rallied up 40% again. That stuff is so annoying. And at some point, it won't work. Like at some point, a 20% correction will become a 40% correction, and it'll cause a lot more pain. But I do think that Trump and administration are not ignoring the idea that they could have a very disruptive midterms next year if they are not checking all the boxes on like we have to make the economy better, we have to make the economy feel better, we have to make somehow the situation and sentiment improve. But do we have to have like a wealth effect recession for that to happen? I think not. I mean, if you have a wealth effect recession, you're going to In fact, both sides of the K, right? PCE is oh fudge, what does PC stand for? It's crap. I honestly don't even know. I should know, or it's at least slipping my mind. Is it something like consumer expenditures? I don't know if it's yeah, let's find out. PCE it came in last week, right? Last week Friday. PCE right here. Let's see. Different than CPI. So change in price of goods and services. I don't know why. I'm like, oh, there's personal consumption expenditures. I was like, hey, something was consumption. Personal consumption expenditures versus consumer price index, which is CPI. So, are we still spending? And to be fair, the top 10, top 20% of earners are doing most of the spending this year. They're responsible for almost 60, 70% of all purchasing to like keep retail sales high. We even saw this during Black Friday, despite the sentiment out there that things are so bad, it's like record breaking Black Friday sales. So, and why? Because I mean, stuff was on sale for the first time in a while. So it's like, yeah, take advantage of it because stuff is expensive. So why not wait for it to go on sale? You know, I too bought some stuff for Black Friday and Cyber Monday, right? I'm like, oh yeah, it's finally a decent deal versus spending regular prices. So personal consumption expenditures. All right. FOMC today, press conference at 2:30. Next week, we have some more data. We'll have the Japanese yen bank rate decision. I don't know if it's on the calendar if they're going to raise rates or not. I think it is looked at into 2026 that they may be raising rates as far as the 25 basis points are at 0.5 right now. We have some data. I mean, ADP weekly. We have retail sales. We're supposed to have a non-farm payroll announcement. I think Thursday is CPI data, unemployment claims. We have ECB rate decisions. I mean, next week is kind of the last hurrah for like the full week of trading. Lots of news stacked in to get us into the end of the year. Could be noisy, honestly. Like, could be noisy. That's all. In fact, if that kind of butterfly trade that I posted today, if it doesn't get filled at all this week, I might look at a similar trade, with similar deltas and mechanics going into the Monday, the 15th into the 22nd. So something like that, just kind of let volatility do its thing, maybe get filled. I don't know. Maybe I regret that because we might have like a one-sided move that catches me off guard. But that's why I was asking for like a decent fill where it's like I'll risk 250 to make 250. I'll risk 250 to make potentially 750 if I get a butterfly trap. Okay. 42.73. That's crazy wide. Yeah, but that's because FOMC. That's all because of FOMC. So to be fair, it's like think of that plus minus 42.73 as it's just the market's way of acknowledging there's going to be a lot more volatility today than typically we've seen the last couple of days, right? All right, I'm going to delete this Fed funds rate. Just comparison this morning. There's my core PCE. Let's go SPX. Let's get our levels, get our workspaces. I'm going to spend some time today. Like I said, if I want to close up some trades on waterfall income, we do have some that are running into the close. So we've got some January expirations, December expirations, 60. This is up 60, 70. It's like if this stays, let's say 60, 70% of our credits, I know I have these potential profit traps. To me, though, I want all these strikes to be like this one here. This is probably the one that I would be pretty happy to get off the table because 6,400 is testable. Now we got filled for 70 cents. We're trading for 25 or 30. It's not a big profit. This was using the 200-day moving average. Okay. But the other ones like, do I think that by January 30th will be at 59.90 or 57.20 or 61.40? And if we get there, are we going to stay there? And my response to that is I think we might get there in like some nasty, 10% correction in the first 30 days of the new trading year. It's unlikely. Like all these are unlikely to even be tested. Okay. But um, if we look at the SPX, it's like this is all the support that I see. With these two levels right here and our moving averages, if something happens where this rolls over hard, okay, I don't know how ugly it gets, but I do know how to measure moves. So this high to low, lower high to lower low puts us around 6,100. If it overshoots, we've got to run to 6,000. That's going to feel terrible. Okay. And, does it stop? I mean, you would hope so. Like that correction would be something around 13+%. So is it possible? Yes. Is it probable? No. Would it, I don't know, it would feel like a terrible way to finish the year, that's for sure. So I just, there's so much riding on today where it's like, all right, this will set the tone for how the market's going to behave the rest of the year. If it's a big indecision candle today, then the market is equally as vulnerable to break a low or break a high into the end of the year, right? And then we have news sprinkled in next week. And I think if we're up here, the news is less effective. If we're in here, the news is more sensitive, good, bad, and different. Because I mean, how many terrible job numbers have we seen the last couple of weeks where it's like we know that the data is being released since the government reopened, but now it's all about the Fed. And so they're taking bad news like, ooh, bad labor market means they're gonna, increase the probability of rate cuts. Okay, but that's priced in a way, right? All this stuff gets priced in. Let's see. Same odds as the Fed, 90% chance of rate raise next week. So you're talking BOJ is looking at that probability. You have that probability on the BOJ. I didn't think that was a thing. It's not even forecasted. So I don't see any forecast for the BOJ. So they're coming out the 18th, along with our US CPI, end of the year stuff. We'll see. I mean, if they raise, that would be it'd be an interesting year to finish the year. Because that could make the carry trade a little bit more vulnerable. And everyone's talking about like, oh, that's going to unwind. It's like, yeah, it might. But even if it does unwind, I don't know how many of you are currency traders. I've traded currency since 2007. I still I've been lucky more than I've been like skillfully profitable on Japanese yen trades, because this could be nothing but noise. And then some, it's like, it's still technical. It really is, but it just doesn't move like other currency pairs do. I literally did this yesterday. See if this is still okay. Let me just push play here. I did this. This is whatever. Right. This is just for my own entertainment, but this is a robot that I've had running in my Forex side for a while. Before I joined Prosperity Pub, some of you that knew me from Market Traders, I built several robots, but I love this robot. I showcased this robot last fall during an algo conference when I was speaking in Australia, and this has been one of my favorite, most reliable. Like, keep the drawdown less than 10% and typically generate 10, 15, 20% a year. It's all based on trade size. Like, I trade this thing super, super small. I hardly ever worry about it because it's trading on currency pairs that I trust. Currency pairs that I trust are the ones that don't like to trend, ones that are highly efficient. And let me get rid of the grid here and just show this. So what this robot is doing is basically looking at some overbought, oversold conditions, grid trading in, and leveling into like ATR based moves and trading efficiencies. So I'm going after these net like 30 pip wins. I can increase that or decrease it to whatever I want, but I program this to do, I can go after 50 pip wins, 100 pip wins, but I like to have this robot get itself out of trouble, right? So would I ever put this robot on a Japanese yen pair? No, never. Okay. And the reason why I would never do it is because I don't trust that the yen would be that efficient. And I could get stuck in these like thousands and thousands of pips of movements, and I'd be in this massive drawdown. But trade size can control the size of the drawdown, but I would have to manually intervene and then kind of dollar cost average my robot out of trouble, right? But if I trade other currency pairs like New Zealand CAD, Aussie New Zealand, Euro Pound, some of the Swiss pairs like CAD Swiss, Aussie Swiss, New Zealand Swiss, a lot of these like commodity based currency pairs that are attached are really efficient. They find pivots, they find pockets, Every time there's a push, there's pullbacks. There's just balance in the market, and this robot is really good. So anyway, I had this video up and running because I'm pushing some of these out to some services that have requested some forex trading. So to me, this is one of the easiest ways to get forex trading because it's a 24-hour market, and that's part of the reason I moved away from it. Was I trade boring, and I use forex to like invest, and getting up at 2 in the morning to do a London session or look at the London session or try to scalp, it's exhausting. So yeah, let a robot do a lot of the work for me, and that helped me a ton. So BOJ raising while US is easing. Yeah, correct. Yeah, so global yields are going up. The US Japanese. So everyone's talking about like 30 and 40-year bonds. Those are not really the important one. It's the US 10-year that matters. I'm going to pause this for a sec. It's the US 10-year that matters, in my opinion, and that one has been going higher, and our 10-year has also been going higher. It's been stickier, right? So, all right. Anyway, we got some work to do. Let's get some workspaces up. I'm going to get my high and low. Like I said, this morning's trade, I don't think I'm going to execute it because I know how this plays out. When you go into the day and it's FOMC day, most of the volatility is stuck all day. So you can put a trade on. We can see prices do like 5 to 10 points of movement this morning, and we don't get paid, right? And I don't want to hold on to a trade that's only 50 points wide, and the market maker move is 42.73, and we could easily see like a 60, 70, 80 point move today, one way or another. So what I'm going to look at instead is let's go to some real-time gamma. Let's calculate based on the VIX. Let's get some highs and lows, and I'm going to put in some of those defense trades. I think that to me is like a safer play using the VIX. So it's calculated. The market might surprise us. I mean, look at how wide this is. We have a 6,900 gamma level. We have a 68.75 gamma level. So this is already a move to the expected move at 40 plus points. 6,900. If we hit that today, I mean that's 70 points away. That's almost double, right? And then to the downside, do we drop 30, 40 points to the downside? Maybe. And a lot of times FOMC does both, where it could find a way to flush lower and then rip back up. Okay. And all of this, by the way, between 68.50 and 68.15, this is a negative gamma transition zone. Negative gamma transition zone. From 68.50 up to 68.65, or even the bigger gamma at 68.75, I would say that would be your positive gamma transition zone. Okay. That's a lot of potential movement in order for us to like keep price contained within a daily profit play. That's a lot to ask. So although there may not be direction this morning while we're talking, now, there's likely going to be direction, and a lot of it, whether it closes at these lows or highs or it is noisy, there's a lot of movement that's expected today. Okay. So I think this is a good one to kind of spectate, not force a trade. What I would do and what I will do is look at calling the kind of high and low based on a VIX. Okay. Because, and again, I will adjust this in real time. I'll be watching stuff. I'm doing a live session today at 1 o'clock to get into FOMC this afternoon at 2 o'clock. So you're all welcome to join me too. I'll post it on my YouTube channel. That'll be youtube.com/Chris Pulver. I'll be live at 1 o'clock. I think I'm just going to stay live through the FOMC. Yep. Bodon says counterintuitive price hits goes nowhere all morning. Yeah, volatility premium. We're not, that's what I'm saying. That's why we've seen it happen. And I think part of that is if you're willing to go like 10, 15, 20 wide, you can probably get the time decay this morning to at least carve out a little bit of a profit if price truly goes nowhere. Okay. But I know the 5 wide, prices are much more sensitive. Prices are much closer together. And we still have like that, that gamma exposure that with implied volatility, just it doesn't give you the typical like daily profit play decay. So, knowing that we're not going to get the trade treated the same way, management wise, this is why I don't force a trade. Okay. So what I want to do is let me finish pull up my workspaces here. This is my gamma one. This is my daily profit play indicator one. We'll call our highs and lows. We're going to get a screenshot for yesterday's daily profit play, which was, I think it was a non-fill yesterday. Is that correct? We did not get filled yesterday. Yeah. So do we stay inside the 50s? Yes, we did. We got no trade yesterday. Quiet day. Okay, closing price was right at 40. And it was a bummer because I had a couple of butterfly spreads on yesterday. I needed like a 39 to 31 window or 41 to 45 window, and they didn't freaking happen. So that was annoying to me. But I can't control that. So whatever. 12, 9, and then today is the 10th. All right. So we opened up a little bit lower. I'll make this adjustment. This will be a 68.40 center price. And you can see that my VIX box is pretty high. Let's get into a couple more workspaces here. I've got that one. This one for my day to day. This one for my VIX. Okay, so VIX is at 17.52. Right now, again, we can roughly call, VIX highs around 17.52. This is subject to change all day, right? So does VIX spike up this afternoon? Does it dump this afternoon? I don't know, but maybe, I don't know, maybe to be safe, we give ourselves a little bit of a buffer. I'm trying to play some defense here, to be honest. It's like, could we have a VIX spike to 18, 19, 20 today? Sure, maybe. I'd rather be positioned for like a 20 VIX than sitting here with positions like, oh, let's put in like a call spread at the top or the bottom that I think we could have price will stay below. And all of a sudden the VIX goes boop, just like that this afternoon, right? So I'm going to look at kind of posting at least to start, and I'll monitor this through the day. I'm going to do like a 20 VIX. So 20 VIX is around a 1.25% move. And from here, 68.40, where'd my box go? Oh, that's weird. 6840. Okay, I'm going to go 1.25%. So we had a gap. We'll take this close, 1.25. $69.25. Okay, and I'm looking at this as a VIX value of 20. I'm going a little bit further, on the VIX just to give it some breathing room, and then I can make adjustments, kind of narrow it down as we come into to the close. Okay, and then my potential low of the day. Let's take our gap lower. Let's go gap lower. Go down 1.25. About 67.47. All right. Does everybody understand what I'm doing here? So I am putting in a much higher VIX calculation right now to call essentially like a high and a low. Now this can change. Okay. So if the VIX does not spike up anywhere near 19 or 20 today, then those highs and lows don't matter. And if the VIX goes up, generally that's because prices are falling. So the only way this is going to increase to, an 18 VIX or 19 VIX is if prices continue to fall, which right now you can see we're not happening. We started out lower. We're already starting to fill positive, negative gamma pivots right around the 68.50. This is what I'll be watching. And honestly, we're probably going nowhere for the morning. Okay. I'd love to say that we can just take a simple daily profit play and get paid, but the time decay doesn't work the same way, which is really annoying because we can sit here and wait until, 2 in the afternoon. And it feels like this. This is what a time decay should look like. And we have that rapid runoff at the end of the day. But what it does instead is it just stays like this. And then after 2 p.m., it's like, okay, if you're right after 2 p.m., you have that really quick drop in time. But it's like it's so sticky for the first like 4 or 5 hours until you have the Fed, because that's where all the volatility is baked in. And just I'm saying that because we've seen it happen many, many times during FOMC days, because it's an afternoon news event that has a lot of uncertainty. It's a news print as well as a press conference, and then there's obviously price action on Jerome Powell's words. Okay. All right. So I am going to put in, we're at 17.46 now. I'm using a 20 VIX, so that should be enough to contain like a 1.25% move. And I'm going to go ahead and put in a 69.25 top and I'll go 67.40 bottom. Okay. So it's going to look like this, and you're welcome to have these trades. I'll give these to everybody if you want them, and I'm going to be adjusting them if needed. Okay. So today's the 10th. I'm going to the 69.25. I'll write this down. So 69.25 and 67.47. So I'll probably look at a pin price at like 50. So I'm going to go 20.25. So 69, 20, 25. So I'm going to prefer to do a broken wing here. Now, there's two ways you can trade this. If you wanted to just tighten this up and go, okay, Chris says the high is going to be 69.25, then do a 30 by 35 bear call spread, right? If this gets filled at like $1, you're putting in a risk risk 4 to make 1, but it's a 3 delta. So, I mean, it should be like a very high probability of profit today. If we have a spike up in direction, this could get filled for $1, and the probability of staying above there is pretty slim, right? But, I'm going to do a broken wing because I want to have a profit trap and increase my break even by about 10 points. So I'm going to go 30, 35 by 40 or 45. That's my skip strike here. So I would buy, sell, buy. There. So broken wing, try to get filled for $1. And that's my trade. Pending. Okay. And then 67.47. 67.47. I'll start it at the 40, 35, and 25. And now I have a butterfly this way. Okay. And again, this is a broken wing butterfly because I'm looking to collect a credit and essentially call the top and the bottom. Okay. If you just want to do a bear call spread at the highs or a bull put spread at the lows, that's fine. Like that's a little bit easier to fill than the broken wing. But your break even is if you pulled in $1, okay, if you do a 67.40 by 67.35 bull put spread, you pull in $1, your break even is going to be 67.39. If I do this trade, I get filled for $1, my break even is going to be 67.29. It's a big difference, which is why I'm taking this trade. Like it's pending, it's not filled, but I'm going to put this in for $1. 67.40. Again, this is like lower deltas. This is a 6 delta pin price. I'm gonna try to put this in for $1. And if the VIX spikes up, I might buffer this one a little bit, but I'm accounting for a 20 VIX today. Okay, we'll see what happens. All right, so let me put those in. These are going to be bonus trades, and they're optional. This isn't a part of any service. This is just being part of my daily profit plan for the day. So optional trades. SPX 12/10 expiration. We have the buy 6930, sell 6935, and the buy 6940. Nope, 6945. Dollar credit pending. $67.40, $67.35, $67.25. Okay. Everybody see that in chat? That's where we're at. Couple of pending orders. Okay. Now, do you want me to explain those trades? Do you want me to show those trades? Do we understand where the tops and bottoms are at with those trades? Do we understand where our break evens are at with those trades? This is the important stuff when it comes to trading options. You shouldn't just blindly assume like, hey, this Chris guy seems to know what he's talking about. You should understand what we're doing. So let's show it. Okay. I'll build this trade out in option chart and I'll show you what it looks like for today. Okay, where's the VIX at? 17.36. So we have a little bit of a. I mean, if I wanted to tighten this thing up, I could. 17.66 VIX high. It's like, is that our high today? Maybe. But just with the volatility this afternoon, I don't know. So if it is, great. If the VIX gets really wild this afternoon, I just need to be, observing that. I need to be mindful that maybe this thing, does have a wild VIX today. But I will say that if we only have a high of 17.67 today, 17.67 divided by 16, we're looking at like a 1.1% move instead of a 1.25% move. And yes, Matt, I'm confirming that. Yes. And look, the Iron Condor trade, the daily profit play is fine. And it's still based on the same mechanics. The plus or minus on the day, remember, is 42.73. Don't be surprised if the market makers from open to close still keep prices within 42.73. But the issue is if you take the trade this morning, you are probably going to sit on it all day with no profit. And that is not how the trade works, right? Our trade is we take it when we get filled in the mornings, and we should be out within 60 to 90 minutes typically. So no, I don't want to take a trade and know that I'm going to sit on it until 2, 3 in the afternoon and hoping that FOMC is going to be cooperative in price. It probably will be. Market makers are probably going to be fine, right? In fact, when it's like highly anticipated news like this, they generally like step up their volume and they step up their action, and it's like an open floodgates of volatility for FOMC days, and usually that challenges in a good way. That's like that like makes market makers and efficiencies like stand out. So you can have all this highly anticipated stuff, but it all comes back to what market makers do best, which is the expected, okay, which is 42.73. This is our plus minus, is greater than the actual. And this is what we don't know yet. So by the close today, it's like from open to close, what's the plus minus actual? If it's less than the expected move or the anticipated move today, then yeah, the standard daily profit play works. And it probably will. But because the actual comes all this afternoon, all the volatility is going to be, 2 p.m. to 4 p.m., I don't want to sit on the trade all day. Right? So it's okay to, not force this trade and maybe have a bit of a backup plan, which is what I'm trying to do here. So VIX at highs at 17.68. That's about a 1.1% move. So I can put a backup plan in. Let's go 1.1%. And I'll build this out in option strat. So 1.1% would be around 67.58. Okay, 6758. Make a note there for that 1.1% move. That's a VIX at 17. What was the exact VIX high? I've got a 1766 VIX. Okay. And 1766 from this close would be 1.1%. That's around 69.15. Uh, 69.15. Okay. So just a couple of spots to be mindful of for today. Right around the VIX box, high and low. That's my yellow box here in my daily profit play indicator. So what's price likely going to do? Probably nothing. It'll hang out in here for the entire day, and then we'll have this huge volatility expansion in this afternoon. And then when it closes, it's probably going to be somewhere between a 42-point window, more than likely. Okay. However, we've seen it's not very regular, but we have seen that there are some days where the market goes higher and stays higher, goes lower, stays lower. And we have a directional Fed day. That is unusual. Most Fed days are very noisy. There's a lot of volatility, but ultimately not a lot of direction. So if we do have a crazy move like this, part of me wants to fade this, right? We do have a crazy move like this. Part of me wants to fade that because that's what I normally see during Fed days. But it's also one of those days where don't pick up nickels and pennies in front of a steamroller if the market's going to be directional. So watch the VIX. All right. All right. Let me build this out. The trade that I posted in the chat. Let's go option strat. Build this bad boy out. So we're going to go long butterflies, and I'll skip the strike so that puts in a broken wing. So today SPX is the 10th. And the call side, we're doing a 30-35. So 30, 35, and 45. Right? So that's my call side. We're going to go 69, 30, 35, 45. So that's my call side. I'm looking for $1 right now. This offer is like 0 to no credit. So I want this to fill for $1. And then my put side, I'll add in a buy put, sell put, buy put. And those are down to 67. I'm doing 67.40. So buy the 67.40, sell the 35 with 2 contracts, and then the 25 there. Okay. So that's the trade that I put in this morning. It's pending. Right. So that would be $1 credit. Actually, I take that back. So an option risk graph is this level all the way over is a $1 credit, right? So it's a $1 credit on the call side, a $1 credit on the put side. This is my profit trap that's worth $500. This is my profit trap that's worth $500. This is what, if these were to fill, this increases my break even. This gives me a 10-point buffer here. It gives me a 10-point buffer here. Okay. So prices in the middle. This is live prices in the middle. So we're giving ourselves plenty of room above or below. Yes. And this is all based on a VIX calculation, which is to me the safest way that I know how to call the top or bottom for the day. Calling the top or bottom on the day using like a 15 delta is never a guarantee. Sometimes 15 deltas become 40 to 50 deltas when price is moving. But a VIX move is, I've seen, like, it's been one of the coolest things I've discovered the last few years is like trading 0 DTE since 2022. A lot of 0 DTE that the VIX helps me a lot. Okay. So these are unlikely going to get filled this morning. But if we have a big push in direction through FOMC today, these have the chance to get filled. I want to make sure that what we are not doing is undervaluing the VIX. So right now I'm looking at a 17.66 VIX, and I've gone ahead and just put in the trade this morning based on a 20 VIX. So pop quiz question, how would I have to adjust this trade? If I have a call butterfly up here, a call broken butterfly up here, and I have a put broken butterfly down here, what would have to make me adjust this trade? It's going to be based on the VIX, right? So if the VIX is greater than 20, if it's greater than 20, then I need to move these strikes further up and further down. If it's less than 20, and this is after the news is happening at 2 p.m., then maybe I can just take the VIX high for the day and make an adjustment down. But I'm erring on the side of caution today to at least put in a couple pending orders. All right. And if the VIX is going up this morning or this afternoon, if the VIX is going up and the VIX goes from, 17 point, what is it now? 24, 17.24, and it goes to, let's say 21. Generally, that's going to mean prices are falling. If the VIX is going up in value, that means that our SPX prices are likely falling. So that's where we have to be careful of calling the bottom, because we have to make it with a 21 VIX adjustment. If the VIX is going to keep screaming higher, it's like it's tough to call the bottom. Okay. So just like the easy trade would be if the VIX is screaming to the upside, cancel this trade and don't call the bottom. And then if the VIX has like a spike where it's like, okay, VIX is ripping, and then boom, huge reaction on the VIX, that's the top that I would say, okay, now I'll put my broken wing butterfly there. Right. So this is a very dynamic position where it's like, I will watch this stuff all day today. I'll be live this afternoon for FOMC. I'll hang out, figure out if we have to make some adjustments. But this to me is like the safest way that I can either get a, high probability top or bottom with a trade that also helps me get like a 10-point buffer. So I'm not seeing price surpass my highs and lows. Okay. Boda says, if it moves farther than expected, would you put another broken wing? Yeah. But I'm trying not to get like this trade filled and also have the disappointment of, well, I'm going to risk, $400 in this trade. But absolutely, I look lower. I try to, mitigate some of the risk if I went lower with another broken wing or so. So yeah, I could see myself stacking up a couple broken wing butterflies to the downside or the upside. Most likely the calling the bottom is the hardest part because the VIX is going up. The calling the bottom is the hardest part. Yeah. So if we see the VIX going like spiking right up to like 21, 22, I'm probably going to cancel these two orders and I'll reissue them. Meaning I'm going to use the dynamic VIX. So long story short is this. Whatever the VIX top is today, that's where I want my top and my bottom measurements. Type in a yes in the chat if that's clear, right? If the VIX top today is no further than 1767, that means that we should have a move that is no bigger than, like, if this is the top today, we should have a 1.1% move maximum on the VIX and on the S&P. Okay. So if this is the top and we're down here for the VIX today, we could still have a 1.1% move on the S&P. And whether that's to the upside or downside, I don't know. But that is my safest way to call like the highs and lows. If the VIX is going higher, you don't know when this thing's going to stop. So you're trying to figure it out. And you're not trying to get steamrolled into like, oh my gosh, this VIX won't stop going up. Well, that means that it's going to be difficult to call the exact bottom. Do I think there's technical support levels? Yes. I mean, I think 6,700 is a great support level. That's the NVIDIA sell-off candle high from November 20th. But that's beyond a VIX 20 if we're going to get there today. Okay. So this all like works together. The VIX intraday is going to be a really good way to predict how far the S&P can go today intraday. That is why we have the rule of 16. Okay. And I've had this question before, what is rule of 16? Well, there's roughly 252 trading days in a year. You take the square root of that, that's 15.87. So it's rounded up to 16, right? What this will give us is the approximate day-to-day percentage move of the S&P. Okay. And it doesn't mean like, well, what about the market maker move? What about the plus or minus expected move? That's what the brokers, that's what the market makers are showing. The VIX is the extreme high and low. That is generally like the safest top and bottom to call using the VIX. But that's how we get the rule of 16. Okay. And if this wouldn't even matter to me if we didn't trade 0 DT, right? If I was trading like 2 weeks out or 4 weeks out, it wouldn't matter to me because I don't care what the VIX does in a day other than, well, if it's spiking up, I'm going to try to sell some longer term premium. But every single day when this matters, and it's like, yeah, the S&P is going to move at a maximum of probably where the VIX top is. That's a good thing to know. That's a great level to have some really nice trades where it's like you can get paid to sell premium, make sure like the VIX and the S&P are like matched up where you don't have your levels threatened. When you're selling premium, it doesn't threaten your positions, right? Okay. All right. Hope that makes sense. So trades are in, trades are posted, trades are pending. They're not going in for a particular service. This is just talking for today. Okay. So if you're coming in late to the session, I'll post these in the chat again. I don't know if there's history in this when you come into the chat. So for anybody that just popped in here in the last maybe 5-10 minutes, this is a trade that I'm posting for the day. This is based on a 20 VIX value, which is more than what we have. The VIX value high is around 1766, and I'm doing a 20 VIX. So I'm giving myself a lot of breathing room here. But if we have a big spike in volatility, that would be an increase in the VIX of 15, 16%, which in a day can certainly happen. But if the VIX is going to get smashed lower, then I'm going to make my calculation based on a 1766 VIX. I might still call the top today, right? If we get directional, we might still have a push where it's like, yep, price is going to go bullish, maybe test that like VIX high around 1766. That would be a price level of around 69.15. Okay. So how would I trade that? I would buy the 67.10. I would sell the 67.15 with two, and then I would skip a strike and go buy at 25. So I would buy one at 69.15. I would sell two at 69.20, and I would buy one at 69.30 if I'm trying to be nice and safe with this trade. If I wanted to pin this thing, then I buy one at the 69.10. I pin, this would be a -2. I pin at the 69.15, and I plus one at the 69.25. That is still a broken wing butterfly structure. So broken wing butterfly structure, I try to pull in $1 credit. I give myself the extra 5 or 10 points of buffer for that profit trap, and then my risk would be $400 over here. Price would have to go beyond all these levels to do it. So will I make a decision on that? Yes. If we're watching this all unfold for FOMC today, I will make a decision whether or not I want to tighten up my trade and try to get like a top called. But I'm going to go 20 VIX right now just to give myself some breathing room, and then make the adjustments as we get into FOMC today. Okay. All right. Yeah, it's going to be a 1 p.m. session, Donna. I'll be live at 1 p.m. I think I'll just push the stream. I'm joining A1 Trading today, so it should be around 1 p.m. I'll push it on my YouTube channel. So youtube.com/Chris Pulver. Did you get filled anything yesterday? No. Nope. Those trades yesterday, the daily profit light did not get filled. The trades I took yesterday were end of day butterflies. And I had 3 or 4 traps for the final, 60 minutes of trading. And it settled right in between a couple of them, where I had a trade that won like $15, and then one was a loss of like $30. And then I had 2 that were above and below that were losers of like $40 and $50. So I lost like $110 yesterday. But that wasn't a service trade. I was like, I'm putting in 5 wide traps at the end of the day, hoping I was going to get lucky to hit like a $3 or $4 winner. I didn't. I was risking like maximum of like $150 to make anywhere. If I got a profit trap, I would have made up to like $430, $440, or close to it. But unfortunately, it was like at the edge. It was at the edge of my butterfly. So if this is a butterfly spread, the price closed like literally right there at the edge. So I made $0 on the profit trap, and then I had one that was overlapped that looked like this. Okay. So I had this one was a loser, and then another one up here that was a loser. And even though this one was in the zone, it's like it only paid me like $15. So small loss, and then a tiny little profit trap that, it was pretty worthless, but just did at the end of the day. Link. Yeah. So if you're in my YouTube channel, Kirk, you can go youtube.com/Chris Pulver. Just kind of my page. If you subscribe to my YouTube channel, and click that notification bell, all that stupid stuff that everyone does on social, I go live at 1 o'clock. It'll pop up and notify you, and you can jump in, or just come to the site, check it out on the channel. Cool. All right. A couple things. It's 10 o'clock. I do want to talk a little income grid. You'll see some more about this. I'm going to join Lance again on Monday in his Stonkomania session, and we'll have some time kicking this around for the month of December. I'm going to share some stuff. So I went back and tested, manually tested. Let's see here. I manually tested. It was 6 years of SPX. So SPX, XSP, SPY, very similar. Here's what I'm doing. Let me see if I can find. Yeah, this is pretty good. All right. So every single week, and this is, look, 2020 was a 30+% correction. 2022 was a 10-month 30+% correction. 2024 had a 5 and 10% pullback and another 6% pullback. 2025 had a 10, 15 total peak to trough 20%. We had a 2 to 3% correction in September. We had a 2 to 3% correction in October. We had a 3% correction in November that turned into a 5, almost 6% correction in November. And here we are again. But that peak to trough, again, 20%. So every single week, every single month, I'm looking at, could I find a trade to just double my money? So this strategy to me is all about proper reward to risk. It's another like steady income trade. It's lower volatility. It's very risk defined. And I had this thing set up where all I'm doing is putting it into trade every week. And this is going to be something we can do before the market opens on Monday. Okay. So what I'm doing with this service, this will be something I'm officially launching in January. What I'm doing with the service is before the market opens on Mondays, we can have these levels set. We can put in our trade and off we go. All we need to do is see price, get us filled at the price we want. Don't settle for less. Okay. There's a little bit of breathing room here, but I'm very firm on like, if I'm going to risk $250 a week on one contract, I want to make $250 a week on one contract. Right. So the nuance is, well, Chris, it didn't trade for $250 this week. It traded for $2 this week. Well, if you want to take $2 and risk, $300, that's fine. But I don't want that to be like how we accept the strategy. Does that make sense? Like I want a 1-to-1. And the same thing goes where, well, I got filled at $250. By the end of the week, it's up $175. Should I just take the profit? Well, the answer is sure. You can do whatever you want, right? But I ran this manually. And the point is from a Monday to a Monday. So I'm not just going Monday to Friday. I'm going Monday to Monday. So I give the market the weekend. I give the market like kind of the time to kind of think about what it's done for the week. And it's amazing how many times I've seen the market, open on a Monday, go up Tuesday, Wednesday, pull back on Wednesday, Thursday. And then for a, Friday, just kind of stays here. And then the next Monday, up again. And we're clear. We get our fill and we have our full 250 profit. Okay. I've also seen plenty of weeks where the market goes down, comes all the way back up on Friday, not quite enough. And then the next Monday gets above break even and we're profitable. I've also seen the markets from a Monday, start off on a bad Monday, work its way back all week, and then finish on Friday, Monday, positive. So point is 70% over the last 6 years. This isn't just like, oh, this is a good bullish year for 2025. I tested this thing through COVID and through 2022 and whatever comes next. I mean, if the market gives us a bear market, here's what I do. I don't trade every week. Okay. So what I'm trying to give us like the opportunity to do is it is better to be a bull in the markets when it is bullish conditions. So simple as this, right? If you're doing bullish direction, I want to make sure that we have a 1 hour and a 4 hour and a daily aligned all bullish. Okay. And from there, we want a 1-to-1 or better. And there will be some weeks that I place this trade that it doesn't get filled. There'll be some weeks that I place a trade and it does get filled. I'm going to keep this really simple. I'm going to focus primarily on credit spreads. And the reason why is because a credit spread allows me to lower my break even. A debit spread, which some of you are now familiar with debit spreads, and they're called wrap orders. Nate calls them wrap orders. Graham calls them wrap orders. They're debit spreads. Debit spreads are fine, but they are an increase in your break even. A credit spread on a cash settled instrument with no assignment risk, you're going to decrease your break even or improve it, right? So if I were to take a trade, let's say price opens here. If price opens here on a Monday, okay, and I take a credit spread, my credit spread fill is going to decrease my break even. So this is where my trade is breaking even, which means if price goes absolutely nowhere for the week, we can still make money. I would rather do that than have my increase of my break even be up here, where I need to cover that size of my debit. Does that make sense? So I'm going to focus on credit spreads. Okay. Why are the dates being shown? Because that's why I started. I started in 2020. Because I thought, look, I've been trading the markets for 25 plus years. I thought if anybody has come into these markets in the last 5 years, 6 years, where you traded basically COVID to now, we've seen some pretty wild stuff. Even during 2018, 2019 with volatility events and stuff, they're kind of one-off volatility events. But COVID was a crazy event. I mean, the whole world shut down for 30 days. And then the markets are like, well, this isn't real. It's an overreaction. Now we go back to normal. And then 2020 became a crazy melt up for the rest of the year. 2021, it was volatile. All this was volatile, right? 2021 was a big melt up until the end of 2021. And then we started to see the top out in 2021 in November and the top out in January 2022. And from 2022, the market spent 10 months going down. 2022 was actually like a bond bear market that dragged equities with it because everyone thought it's like, this is the recession. It wasn't a recession. Technically, they didn't call it a recession in 2022, but it was a terrible bond market, which dragged everything down. So there was nowhere to hide in 2022. The only reason that I made money in 2022 is because of waterfall income type strategies and because of currencies, because I was hedging like crazy with like Japanese yen and dollar plays. That's what allowed me to carve out money in 2022. 2023, once we kind of bottomed out in November 2022, off we go. 2023 was a good year. 2024 is more of the same. 2025, you know what happened this year. So we're starting in 2020 because I wanted to go back and test some crazy conditions. So point is, if we have the path of least resistance, meaning the markets can stay bullish longer than people think, and when the market flips to go indecisive or to go bearish, I just don't trade. And look, I tested this both ways. If I were to test this both ways and trade every bear condition, every bull condition, I still win 65% of my trades. Okay. But look, my profit factor is 1.86, which is fine. I still make money. I take a lot more trades. I win 65% of my trades. That's fine. But net profit compared to trading bullish only, okay, profit factor jumps up to 2.15 versus 1.86. So this is bullish only. I make more money. I trade less. I make more money, quality over quantity. And then I can increase it even more with the strategy that I'm going to provide for my income grid trader. Okay. Made more money, highest profit factor, highest win percentage. So I'm building a short-term, medium-term dashboard for directional bias that keeps us on the right side of risk. So we know how to stay in, we know how to stay out, and this is over some really crazy conditions. And look, I would love to say that, oh yeah, we should just trade bearish trades. The timing of this and how volatility behaves and how prices behave in a bear market, it's so difficult to do this like week to week. If you're in a bear market, you're better off having like a 1 to 3 month window and just try to get the bear market captured. But if you're going week to week, price volatility is way too noisy. But in a bull market, price volatility is chill and it just kind of grinds. So we make a lot more money in a bigger stretch over the course of those week to week grinds. Make sense? All right. Let's see here. So an average about 2 trades a month. I mean, no, there's 4 weeks in a trading year or 4 weeks in a trading month. So I'm putting a trade on like four trades a month, hopefully minimum. Okay. That's the plan. We're looking to trade every week. So I'm going to do weekly. I'm going to do monthly. That's going to be my focus for my income grid. Okay. If you want to join Lance and I next week, I should say, I mean, I guess it's Lance and I'm a guest on his show next week. So for Lance's Stonkomania, I don't know if that's the official name for it, but Stonkomania Monday at 1:30 p.m. Eastern time. I'll be on that segment. He and I are going to do a couple more segments into the holidays, but I'll share some more. I have some slides. I'll have some images. We'll have some more refinements to it. But it was actually, even though I don't enjoy spending probably 10 hours a weekend of my last like 3-4 weekends doing this, it was worth it to go in every single week, buy the numbers, follow the rules, take the trade, and see the results, and just reinforce like how good the strategy is. And also not think like, well, I'm just totally cherry picking because the market's been bullish the last 3 years. I'm not cherry picking. I'm throwing in 2020 as a result. I'm throwing in 2022 as a net result. We've had corrections. I mean, we had a 10% correction in 2023. Nobody thinks about it, but we had a 10% correction from July to October. The market was making lower highs and lower lows. So that's the importance of recognizing when to stay out, when to show that the market is clearly indecisive. Don't force a trade, but also make sure that whatever trades we do take are going to be risk defined. Okay. So the plan for this service is going to be either I post the levels that we want to focus on Monday before the market is open, okay, or Sunday night. And most likely I'm gonna air for Monday mornings because I value like every moment I can get in my weekends, and I'm gonna do it Monday mornings because nothing's opening. Like Sunday night, the futures market opens. If there's a huge gap somewhere, we can still trade it Monday morning. We're placing trades Monday morning anyway. So, but I can post this is going to be our trades, nice consistent Telegram message, touch points throughout the week, and very simple trades, right? And this is like the high level like tip of the surface because we are going a little bit deeper. We can go more than just one level. I call this a grid trader for a reason because I want to have some additional levels, but we'll talk about that more in like upcoming sessions. Cool. Yeah. So SPX, XSP are going to be my focuses. XSP if you want to trade the more cost effective cash settled. SPY, QQQ are totally acceptable, but I didn't trade QQQ. Right? I didn't trade QQQ because it's naturally about 20 to 25% more volatile than the S&P. And knowing that, like, yes, there's been reflexive rallies, but like for every dip and pullback that we see, the noise that I experience on QQQ, it doesn't necessarily pay us more volatility, right? Like if I'm doing credit spreads, I want to get like an extra 20% of premium, but I don't generally get that, right? What you end up having is you just embrace more volatility. So point is S&P as a broader market was a really good instrument. So SPX, XSP is going to be my focus. You can still trade this on SPY if you want to. I just know that every time I mention the SPY, the first question I get from most followers is, what about assignment risk? And so I'm avoiding that. If you don't want assignment risk, we're going to trade the indexes. So we'll trade SPX and XSP, right? My only beef with XSP is that it is not as liquid. Okay. You can still put the trade in. You like this would be like a $1 wide. You try to get filled for 50 cents. You can still take that trade. It's just not as liquid to close it out, at the penny that you want. But it doesn't really matter because your line in the sand is established and they still win 70% of the time. Okay. All right. So we'll spend some more time on that. Price action for the day, like I said, unfortunately, look, this is a perfect daily profit play now that it's 45 minutes in the open. Perfect daily profit play. However, I know that price isn't behaving. If anybody did take a daily profit play, tell me. Because if you did, I want to know your strikes and I want to know, are you actually seeing profit on it right now? Because I would imagine that if you did take the trade and get a decent fill, is anything happening where the last 45 minutes of very little price action is actually showing you profit? Okay. So if I have anybody, my typical like daily profit plays that are just hardcore daily profit play members, did you already take a trade this morning? If you did, that's fine. But I'm just curious, is it showing profit right now? Okay. Larry's got it. I count on you, Larry. 67.10 by 67.75, 10 wide. Okay. 69.10. Okay. I mean, that's up there, dude. Did you get filled? And what were those deltas? Okay. Um, it's not bad, dude. Buck 55, 10 wide. What were those deltas? So your put side, you're not going down as low as I was. So okay, 69.10. I mean, heck, man, you're going nearly to like the VIX box high, and then the put side, you're a little bit higher on the put side. Got it. Was that skewed by chance? Yeah. So and that's what I was wondering. So like you see that in the chat for Larry. Got $1.55 is trading at $1.48. Yeah, minimum profit right now. VIX at $1.20 credit fill, 68.90, 67.55, 5 wide, 120 fill. Yeah, it's going to fluctuate probably between $5 and $10 profit, $5 and $10 risk. It's just going to be like a big nothing burger, and all of the drama, but also all the time decay will happen um, at 2 p.m. It's going to be like more of a time decay cliff versus a time decay curve, right? So, for your levels, it's like I want to see Vivek's trade stay below 68.90 and above 67.55. I want to see Larry's trade below 69.10 and above 67.75. That's how I want it to work. I want him to get paid. I just know that the time decay doesn't work the same on days like this when it's all baked into that afternoon volatility. So, all right. I know I talked about a lot of stuff today. Waterfall income masterclass is tomorrow. I'm going to go ahead and add another bullet point here. Okay, income grid's coming soon. This should be officially launched in January of next year. I mean, next year is like, it seems so far away. It's not. It's like less than 20 days, right? Like we'll hit, it's like we have Christmas, we have New Year's. We only have one more week of full trading, by the way. One more week of full trading. There's a lot of news sprinkled in next week. And then we have holiday time. And whatever that looks like, I'll be here through most of the days that the market is open. I'm, going to do what I think is best to manage some of the risk that I have. And I'm probably going to take a lot of profit going to the end of the year. I'm excited to, have some client profits that are up nearly 40% for the year. And, 2026 is a clean slate. Doesn't matter what this year was to me. It's like, it's over and done with. Let's move on. Let's go, fresh trade for 2026. Looking forward to the grind as always. Cool. Okay.
Sounds good to me, man. Hey, Chris, real quick, what is this ATR, the zero ATR?
Yeah.
In
So
your
the
context.
grid. Yep. So the grid is this. When you start at the money, okay, that's a zero ATR. So between a 0 and a 0.25 and a 5 and a 7.5 and a 1, that essentially gives me like a grid for the week. That makes sense?
Yeah.
Okay. So I did the numbers testing all of these levels, and I wanted to see if I needed it. If I needed it, I would essentially grid trade my week. So I start at the 0, go to the 0.5, go to the 1. And so what I was doing originally is I was going like 0.5, 1, 1.5, and 2, and just kind of that was my full level. The
Mm-hmm.
reality is a 1.5 and a 2 in 6 years, there's probably less than 5 fills. So it's very rare that you're going to get these. And, when do they get filled? Liberation Day and freaking COVID. Like it would have been like an outlier type event for these to get filled. And what they did is you would take losses here and then have a win on this to kind of mitigate some of the risk. But most of the trades are within this like 0 to 1 range. So the reason I'm calling this income grid trader, and Blake, you're exploiting my VIP service here with Grid Trader,
Yeah, I
because I
am.
want to add additional levels. So the simple way, and think about this, like when we have services and strategies, look, I come out with like, I'll teach everybody everything that I need to know or everything you need to know for the service. And what Prosperity Pub is telling me is like, Chris, you need to keep it very simple for the average trader. And I understand that, but I'm never trying to dumb down a strategy for anybody because you're all smart and capable of a full strategy like I would trade it personally. So I never want it to be like, well, just do this and it's super simple. So the simple version is you focus on the zero ATR because that is what's paid us 70+% of the time. The VIP version of this is going to be, I want to also grid trade this because if I traded XSP, for example, okay, and I went 50 cents risk, 50 cents risk, 50 cents risk, and 50 cents risk, guess what? My maximum risk is $200 for the week, Blake, and I have a 70+% of making money. Cool. I'll
Yeah.
do that. So, I mean, again, whether we start with just the very surface level at the money, or we grid trade this to give ourselves some risk reward, for as little as $200, you can have a weekly setup that is essentially going to set us up to double our money every week. That's kind of the idea. Like double our, so return on capital should be like 100%. That's the plan. That makes sense? So when you see the ATR stuff, that's what it means. So Blake has smoked out my, VIP version of the service, which is fine. You'll all see
I
it.
did. It,
Um,
it was
but that's
actually Sean. Sean asked the
I saw the
question.
question. I saw the
Yeah.
question.
And I was like,
Um,
well, I've heard about it. I was like, I don't know
yeah,
what context Chris is using ATR in, but let's find out.
yeah. So the point is, this simple version, and here's why. Like, take somebody like Lance who runs a daily trading service that places like a directional spread every single day. Okay, I will say this. I probably have heard this feedback more than anybody where you know Chris's strategies are a little bit more advanced. Okay, fine. Like I'm not taking that as an insult. I'm not taking that as a compliment. I'm saying that why are they advanced? Because it's the best way to know how to trade. If I wanted to just like buy calls and buy puts, I'd be half the trader that I am today because I don't think that's effective enough for me to like be the trader that I am. So yes, I'm trading the markets up, down, sideways. I'm incorporating different strategies, but I like the combination that we can do in options to know exactly where our risk reward is and, hopefully not have time or, it's like I want a strategy like income grid that if price literally moves 0 points for the week, we can make money. If price even moves like plus or minus 0.1%, we still make money. That seems pretty good. And in a bullish environment, the general consensus is like we're going to drift higher. And bull markets last 4 to 5 years versus a bear market lasts 1 year. So learn how to stay out of a shitty condition and stay out of a terrible bear market or even a crossover indecision market. And we get back in when it's time to cooperate. So if the market does something like this, okay, let's say that we keep grinding, and then we have a turnover. Well, we're going to stop trading this, right? So I'll put this in red. Like we don't want to trade this. It's okay. And I've tested it. I tried to trade it. But what I discovered is it's not as good. So don't force trades. And instead, if price gets its way back here to confirm, you trade this area. So you trade this area when it's still bullish and drifting. You trade this area when it's ready to go. And the result is you make money here. You stay out of the crappiness. You make money here. And this cycle has gone on for decades, right? Bull markets last 4 to 5 years. If we're trading this stuff consistently, we can make a lot of money in those 4 to 5 year runs. We can also avoid losing the ridiculous pullbacks that we see in those, 3-month corrections, 6-month corrections, 12-month corrections. And on top of that, don't be blind to the idea that when we see this market in red, okay, and let's say this market is red for a 20% correction, guess what? There are generational wealth opportunities to line back up some liquidity and buy the market. And not only participate in something like Income Grid and what we do every single day and freaking, Daily Profit Play and all my services, but to also recognize like the big picture is buy and let it go back up. If we're down 30%, buy and let it go back up. If we're down 40%, buy and go back up. Because if you want to make a crap ton of money, that's how you do it. If you want to piece good strategies and good incomes and be risk defined, you can, get your base hits. Like this is all full of base hits. This is full of the consistent, like just let the market, after it has its correction, let it work its way through whatever trouble it needs to work itself out of and get back to all-time highs. Okay. And right now it's like, you may have read about this, but everyone is talking about, and I'm talking like smart people are talking about this. The forward return expectations are terrible. Like right now, nobody expects the markets for the next decade to do anything good. So imagine that from now until 2026, I'm sorry, until 2036, the markets do pretty much nothing. If you look back at 2025 and go out a decade, analysts are talking about the forward returns being absolutely garbage. Because right now our S&P is at like a 25 times earnings, which is historically way higher than normal. The normal is like 17 to 18. So at some point, we're going to have earnings compression. We're going to have a reduction in expectations, and that's going to hurt our stock prices. And we know a correction is going to come at some point. It's just how ugly does it get? So if we can learn how to stay out of the market, we'll stay out of the market. If we learn how to participate for good, solid income and good, solid reward to risk, let's do it. If we get massive discounts, let's recognize like, if I can own the SPY at 20, 30, 40, 50% off, I know it's going to be painful. You're going to have to be courageous to start like dollar cost averaging in, but that's where you make a lot of money. I mean, I've made more money through like a 2018, 2020, 2022 correction, 2025 correction. That's what's allowed me to have like these, 30, 40% years. It's all because of some ugly correction. It's hard to me. It's like, I'm not that aggressive where it's like a market that does this all year, slow. Like that to me is not going to make me 40, 50% a year, but could it? Of course. I'm just not going to do like, I don't like to trade that much risk at all time highs. So I scale in and maybe this helps me make an extra 5 or 10% per year. And my daily profit play, an extra 5 or 10% per year, an extra, waterfall income, 5 or 10% a year. I can still carve out 30% a year with a variety of strategies. Right. So just try, look, there's something for everybody. I know that initially daily profit play was a lot for people, and not many people come into trading options and they learn how to trade a iron condor, right? Not many people come into a waterfall income with my strategy too and learn how to trade a put condor. Not many people know how to do a combo trade, okay, or a butterfly trade, or a scanner that has to do, it's a volatility based scanner that we do combo trades. Income Grid, it's probably going to be one of the more simple offerings that I have to start. But as Sean asked and as Blake asked, yeah, it does come with a bit of a higher level service. If you want to know the full intricacies, I will teach you, right? But what is proven to be like really consistent is just trading a zero-based ATR, and we decrease our break even, so we have a better break even price. And if price just goes 0 points for the week, we can make money. And in a bull market, that happens like 70% of the time. So anyway, it's like it's tested, it's verified. I like it. I'm gonna talk about it. I'm gonna trade it. So all right. Anyway, we good? All right. Sean says you pull into the waterfalls you mentioned. Not yet. I may close some of those out today. I might, because I may look at the exposure. I think what I'm going to do, Sean, on that question is if we have trades in waterfall that are greater than 6,000, okay, if they're greater than 60, I'll say greater than like 6,150. Any trades that's greater than 6,150, I might just close. Okay. So if our strikes are greater than 6,150, I might just close those for profit. They're all in profit, so that's not a bad thing. And then anything that's our 6,100 or 5,900 or 6,000 or 5,800, 5,700, I'll let those run to expiration because we also have $1,000 profit traps in each one. So, and if we dump there, we're talking about like a 11 to 13% correction to get there, which is rare. It's hard to do in the next like 30 to 60 days. Could have happened, sure. But also if a profit trap lands, that helps me, grab a nice little chunk, because if we get there, we probably have a big bounce off of them anyway. So if I'm looking at closing anything, it's going to be those like 62, 63, 6,400 strikes that we might have. Okay. Yeah, it's okay. Even the ones, because again, 15% away is a long ways away. Even with January to February expirations, it's a long ways away. So anyway, if I do anything, if I close trades, I'll update it. All right. One more thing before Blake's going to fire up a little waterfall income session that we did yesterday. So here's the schedule for today. Before I bounce, we're going to do 1 p.m. live session. It's going to be the FOMC. That's going to be on youtube.com/Chris Pulver. I'll do that live today. Waterfall income. So we'll do today. FOMC. Waterfall income. 2 p.m. Eastern time. Thursday. It's going to be a masterclass. All right. So what Blake's going to play for you is, I'm trying to get this out of the way. What Blake's going to play for you is our session from yesterday in waterfall income. And if you'd like to join me for a live masterclass, I've got some new students that are joining this week, which I'm always happy to welcome in. And let's do a masterclass tomorrow. But because FOMC is today, it's taken front and center, and I'm going to be live for a couple hours to navigate this, potential volatility that we're going to see. So Blake will fire that up, and little sneak peek of income grid. We'll talk more about that. But today FOMC 1 p.m. will be live, and then waterfall income tomorrow 2 p.m. for a masterclass.
Sounds good.
Right. Thanks, Blake.
Hi, Chris. Sure, the audio is working here.
Earnings claims. We have an 12-year study that's gone back over 540 trades, 97.1% win rate. The way that I've taken this trade every single week, like clockwork, is in the waterfall income class. We have an average return of 17% with winners and losers. The risk and reward we're talking about today is about a 15 to 20% return on risk. So if I'm risking 5K, I can make 1,000. Okay. If I'm risking 500, I can make 100. Right? Just that's the scalability. So if you want to risk less, we can risk less. We want to risk more. I also can take this trade size down, and we can risk like less than $100. So we can risk as little as, $60 to $100 and as much as you want. But what my personal like threshold is, I'm risking anywhere between $500 and $1,500 per trade. And we win like almost every single week, like clockwork. And the times that we've lost have been like literally a freaking bear market. Like this year's February, March, and April, we had one non-surviving trade. And everything else, we were able to incorporate the bottom in April, work our way back up to the highs. We were trading every single week as the market was getting cheaper and more discounted. So, we're participating in a market that is trying to go up, even though it had a flush down. we participate week after week. So we don't have to be perfect. We'd have to trade risk define, give ourselves some time, and these winners happen way more than they don't. Okay. And that's the edge. So are there losing trades? Yeah. We take some losses. It's okay. I'll trade through it. All right. Here we go. So with nearly 30 years in the market, I do trade everything. Indexes, stocks, options, futures, Forex. I've spent probably 20 plus thousand hours in the markets. I've certainly seen a thing or two. What's happened the past few months, honestly, just life, man. Life since 2020 has been so weird for people. It's just an interesting time we live in. I don't know what else to say it other than like it is what it is. It's just weird. Life has been very different for most people, probably quite disruptive, and it's probably going to get worse, like more disruptive, not worse necessarily, but probably disruptive. So what's been happening in the last like 10, 11, 12 months has been pretty alarming. 2025 has shown that governments around the world are getting pretty reckless. We have, global stimulus like crazy. We have global fiscal policy coming out left and right. Chinese markets are backed up by the government, most aggressive stimulus since the pandemic. Eurozone for the first time in over a decade, finally putting some money together to spend. So fiscal policy in Eurozone, the U.S., of course, running hot like crazy with fiscal dominance. Inevitable outcome, most likely sticky inflation. I'm not going to say like hyperinflation. That's the biggest fear. I think that's maybe a little bit overdone. I don't want to be surprised by this, but I think a second wave inflation, or at least just more persistent inflation, is going to continue to happen. After that peak in 2022 peaked around 9%. Yes, we've fallen, but life is more expensive. If you care about your family's financial future, which I know you do, no one cares about your money more than you do. So pay close attention. This is an income technique that can help us handle the rising cost of living. By the end of this broadcast, if you want to join me on my master classes this week. Our trade, we have 110 winners in the service. We're looking for 111th. That started at 0, like just over a year ago. So we had to start with trade 1. That was a winner. Trade 2, trade 3, trade 4, week after week after week, like clockwork. And we're now up to 110 winning trades, and hopefully we have 111th right around the corner. And by the end of the year, we'll probably be closer to 120. We have some stacked orders in, so we'll be closer to 120 wins by the end of the year. So I want you to think about this. We'll talk about that risk 5K. If we're doing this every single week, you can make about $1,000, 15 to 20% return on your risk every single week, like clockwork. One trade, one ticker, same time each week. Okay, and I mean this literally. Monday, March 4th, noon. I'm live every Monday at 11:30 a.m. for Waterfall Income, and we're posting the trade by around noon. Shutting down the computer, check out the rest of the week. Everything works out. That 5K risk is paying $11.44 in your brokerage account. Following week, same thing like clockwork. Few days go by, trade automatically closes out for you. You can set the take profit in your broker platform. That 5K risk is $11.86. The very next week, like clockwork again, rinse and repeat. 5K risk, $12.97 in income. Final Monday, no different. Same time, same ticker, same day. 5K risk, $11.50 in income. Even though the market went down, didn't matter. That's about $4,800 of profit during the month of March. One trade, one ticker, same time each week with risk capital. So I call these weekly income payouts weekly windfalls. They have had the power to pay us up, down, and sideways, right? I've seen this market literally for this 12 years of data. We have had 7 corrections in the market of over 20% to the downside, and we have still had winning trades. This tracker, by the way, is only bullish. I'm only trading the market bullish because if you've been around for the last 5, 10, 15, 20 years, you have seen this market survive all sorts of crazy stuff to the upside. The market tries to grind higher, okay? So if you think about this, every 100 trades, we have 94, 95, 96, 97 winners out of those 100. So this is why I'm excited to share this with everybody. This is why it's one of my favorite courses to teach, get people introduced to options, do a couple of basic trades with one of the most important phenomenons in the market. So I'll reveal what we trade and why we trade every Monday at 11:59. So we're live at 11:30. Trade goes out by noon. But I want to be clear. There's no guarantees here. There's no instant magic pill. This isn't gambling. I'm certainly not taking massive trade sizes here. I'm taking what is risk capital. Less than 1% risk week after week after week. Okay, to me, this is a realistic approach that is designed to help give us an opportunity to target steady income on a weekly basis. It doesn't matter if you have a multi-million-dollar retirement account or if you're just starting out with a few $100. Anybody can learn this technique. So brokerage account, permission trade options, and a couple minutes with me each and every Monday. So I make it as easy as possible to follow. I make it consistent. And you want to join me in a live trade? We'll do this on Mondays for 111th winner. If you want to join me for my masterclass, we'll have that this week. Okay, we can target this income essentially hands free. So if it gets you excited, perk your ears up and stick around. Welcome to weekly windfalls. Okay, hopefully at this point, trading with you every single day, you know me. I've been in the markets for now 20, going on 26 years. Options are my favorite tool. I will trade everything. I'll trade anything and everything. If I feel like I can make a trade, it's probabilistic, mechanically systematic, making money, I will do it. But I show up and trade with you every single day. Okay. So some of my top followers making a killing. Here's Ken, 16 wins, 1 loss in the first month. Kathy making $1,000 a day on average. Randy crushing it for daily profit play with over 90% winners at 200 of those clocked in. Lynn turned 4K into over 20 grand. And today I'm revealing a brand new technique that maybe you've not seen before for my waterfall income. This is 5K risk for $1,000 profit or less or more. Okay. I risk less. Personally, I'm like the $500 to $1,500 risk. That fits my thresholds of less than 1%. So I want you to know that this is important, that this is not get rich quick. Like, this is steady, reliable income, weekly income. That's what it's for. Okay. So don't over leverage yourself. When you get into the classes, we talk about the strategy. I mean, I always ask traders, like, what are you comfortable risking? Some people want to risk $500 a week. Cool. We can do that. Some people want to risk, $200 a week. Okay. We can do that. Thousands of dollars. I don't care. You know yourself. You have to know yourself as a trader. You have to know your thresholds of what's comfortable, what's not. No trade, no loss, no win should really make you have any emotions. Okay. You got to manage them. Not saying you have to ignore them. It's but manage them. So when you get to the point where losses and wins feel about the same, you're on your way to be a pretty good trader. So the timing of this initiative is pretty solid. Right now we get it. A lot of people, young or old, are strapped for cash. Inflation's been a pretty persistent thing in most people's lives the last 5 years. Literally everything's more expensive. Unfortunately, everything's more expensive, and it's not going to get better. So a lot of Americans can barely afford to save any money. Cash rates have plummeted. Savings rates have plummeted. Credit card debt's at all-time highs. Subprime auto, student loans, you name it. All this stuff is happening. You've got to take on credit card debt to save your furry friend, or you can't afford to buy something for your loved ones. Credit card debt is the worst. So that's why I'm here today on a special mission, unlike anything I've done before, to target some extra income weekly, like clockwork, consistently, systematic, mechanical. One trade, one ticker, same time each week. Back in April, you have that same 5K to play with. We can take these trades, like I said, as little as $100. I'll teach that in class this week. This was a big shakeout. This is April 2024. The markets were down. We saw the S&P down 5% in a single month. We just saw that recently, end of October to November. We saw a 5 to 6% correction in the S&P this year. So it's not unusual for the market to have a bit of a correction. We just refuse to let it happen, or the things have to get so bad for it to happen. It's kind of crazy. Anyway, Mark's down 5%. Every asset sold off that month. NASDAQ's down, joining the S&P down 6%. Bitcoin slipped double digits. Even bonds were down double digits almost. It's crazy. So most traders were staring at red, staring at drawdowns, losing money. But if you were in weekly windfalls with me, you would have fared much better, because you not only hit once, not twice, but guess what? Every Monday with me in April, we made money. $1,054 in that 5K risk, 1166, 1639, and 1153. Over $5,000 for a month where the markets were down, while most investors are losing their shirts and seeing red and drawdowns. And that's one trade, one ticker each and every week. Okay. Household expenses. This math is kind of staggering. Bare necessity of just to get by. Average household needs about $73,000 in fixed expenses. Unfortunately, the average household in the U.S. is only pulling in about 75K gross income. That's before taxes. So how does this math make any sense? If you have to spend $73,000 a year to live with necessities, and you also have 75K gross that's going to be taxed, there's not enough tax credits to make up for that, and that's why most people are struggling to save. Hang on a second, sorry. Okay, I think I'm good. That was where I heard Graham I was in a session for Playbook or something. Anyway, so the dream house, the dream car, the dream vacation, whatever, it's getting pushed away right now, unfortunately. I think that the American dream has slipped a little bit more from most people's grasp than probably ever before. We have one of the biggest affordability crises in the U.S. we've ever had. I get it, but I'm a glass half full type guy. You got to be. If you want to be an investor, you got to be. There's no reason to be doom and gloom here. If you want to be doom and gloom, you could be Michael Burry and fail like he's done since 2008 after he had an awesome trade. After that, he's called, the joke is he's called 50 of the last 2 crashes. So, the reality is cash is tight for a lot of folks right now. But here's the good thing. Here's the glass half full. If we can show up and trade each and every Monday, okay, each and every Monday, like clockwork, generating nice, consistent income, would that help? If we could win 90+% of our trades routinely, know exactly where we're right and wrong, watch the markets do what the markets do best, would we be happy? I'd be happy. So do we have to pick up a second job, work overtime? No. Trading is the best side hustle in the world. So if you can make an extra $5,000 when everything asset wise is down, including S&P, NASDAQ, Bitcoin, bonds, everything down, we still make money. Pretty good. So do I guarantee this? No. I know the markets can be unpredictable, but what gets me excited about weekly windfalls is these are the type of steady results we have seen through 7 corrections of 20+% or more. We have still made money 94% of the time, 97% of the time when you go back that far. Okay. So for the last year and a half, we've made, wins 94% of the time, and we've experienced some crazy moves. We had a, 6% decline in December of last year. We had a 15% decline in April this year. We had a 20% peak to trough this year. We've survived some crazy stuff and come out ahead. So that's why I like to trade. It works. It's kind of bulletproof. You dollar cost average in the markets. The phenomenon is just let the market be the market. Okay. And this is one trade, one ticker, same time each week. Okay. So we did March together, April together. Here is the downturn. In April, we still made money. And then May was a rally that came back to break even or better. So if you're a buy and hold investor, you're basically like back to break even after sitting and sweating this thing out for 60 days. If you're a waterfall income trade with me, take advantage of these weekly windfalls. You had another 4 winners in a row. 5K risk in each one, 1150, 1209, 1101, and 1672 for another $5,000 going 4 for 4. That's why we have a silky smooth equity curve. That's why we survive and give ourselves time and let the price do what it does best. If you're twice as confident and you invest twice as much, you can make more money. That would have been for the month of May over $10,000 in a single month. Okay. A lot of people, I get it. They're strapped for cash. It's not like they don't want to save money. Okay. It's important to have that rainy day fund, have that extra 3 to 6 months set aside, or just build your trading account, build your retirement up, have some good stuff going on in your life. But, life is expensive. It's gotten expensive. Inflation is persistent. It's pretty impossible to save money right now. This is crazy. Car payments have jumped almost double. Right? Huge increase in car payments. Financing has not gotten cheaper. Insurance is 50 to 100% higher. Price of the grocery store higher, skyrocketing. Right? Mortgages, most unaffordable housing market we've had ever, based on what you pull in for income, based on the cost of a home. I mean, it's now the rule of thumb is like you need like 40 to 50% of your income on average household income, average home price to have a house. And it used to be a rule of like 20, 25, 30%. So big jump. Same house, same property. Just a few years later, almost double in price. So, you call that debasement trade, you call that inflation, you call that whatever. It's just the hard fact is, this isn't getting better. Not yet. Might not. Got to find a way to offset it. That's my answer is like, let's just offset it. I can't rely on like, oh, things are going to get cheaper. Probably not. Life probably won't get cheaper. So how about we find a way to make more money? All right, take a look at this chart. This is 1970s, 2000s. This is when Nixon, Arthur Burns comboed from president Fed chair to run the economy hot for nearly a decade. Massive inflation, cooled off, and then a second wave that lasted years. That's when Paul Volcker had to step in and smash the economy, right? Establish Fed credibility again, pretty much put us into a nasty recession that was a lost decade. Do we have the same thing happening again? Well, there's arguments, yes. Our valuations are at like 24, 25 times earnings in the S&P. That's like in the 97th percentile, 98th percentile, which typically means forward returns are going to be lackluster. So look, we could go up an extra 20, 30, 50%, but we could also crash and give it all back. And so the decade could be like, yeah, forward returns are minimum. So we have to find a way to trade through this. So what comes next? If we have a stickier, more persistent, or even a higher wave of inflation that's coming, nothing's going to be good. Cost of living goes higher. Some economists suggesting that households could be facing another $20,000 in expenses. This is why I want to offset it. This is why I want to have something that grows to help maintain a standard of living that helps grow with the crazy, cost of living. One trade, one ticker, same time each week. Anybody can learn this technique. I teach this to everyone all over the world. You can do this from anywhere. Any major brokerage will allow you to take the trade, permission to trade options. That's all you need, right? So we do this every single Monday like clockwork. June, so April was down. We still made money, $5,000. May rally, we still made money. June rally, guess what? Another 4 for 4, like clockwork. Another month without a single loser. 1250, 1000, 1000, and 1044. That's more income for the month of June. 4200 cash. Is that life changing money? Yes, no, maybe so. Some yes, some barely noticeable. But I do think that when you're making money, having fun with the process, enjoying how you're trading, getting better at trading, seeing the benefits of trading, it's enough to move the needle in your day-to-day life. Catch up on some bills, replenish your savings, or even surprise your loved ones with a weekend getaway. So just to recap, we're talking about 16 trades, winner, winner, chicken dinner. All 16 trades, all winners. We had 40 trades in a row before we took our first loss. And that loss was manageable, by the way. So pretty cool stuff. But if you have that $1,000 per week goal, this does have a huge impact over time, because with those examples from March, April, May, June, it's almost 20K in those 4 months. Yes, it's risk capital, but that 20K, if you analyze it out, you're talking nearly a $60,000 raise at work. Does anybody get that? How many of us got paid an extra $60,000 last year? Probably not very many, or this year. But this is what's helped us, even through the craziest sideways markets, 20+% sideways ranges, or the peaks and troughs of 20 to 35% that the market has given us the last 10 plus years, 11 plus years, we still made money. So yeah, it's been tested. It's been pretty bulletproof. I would if I could go back and trade options at it to 1973, I would put the strategy up against anything, because I know it works. Okay. Plus, more importantly, is that we've taken live trades in the service. We have 110 wins live, and we have plenty more to go. All right. So you might be thinking, can you lose? Well, yes, I didn't say a 100%. Yes, we can lose. But what we should not do is trade with money that we cannot afford to lose. So we will take losses eventually. There'll be some losses here and there, but very few and far between. Do I want to place a losing trade ever? Of course not. I don't. So there's a risk cutting trick that I'll share with you in class this week. This to me is the safest way to consistently target extra income week after week. All right. First Monday in July, 1044 in income. Second Monday, 2377. We do trade options. Okay. This is an options based strategy. So when I say options, immediately the question pops up, are options risky? Well, sure. Most people, the way they trade options, will buy. They'll buy options. They'll buy a call option. They'll buy a put option, whatever. And this is what typically happens. You buy call options, and time is your worst enemy, and you don't realize how to manage it, because it is absolutely something you need to manage and harness when you're trading long options. So it's what options can be is you can basically, options are offering leverage. Even though it's risk defined, it's still offering leverage, because one contract represents 100 shares, and you're looking for that stock to move the right direction over a certain period of time. So the problem is, when you buy options, you don't typically get the big payoff, because price doesn't move fast enough and aggressively enough on something like an index. It might move in individual stocks, but all the stuff is priced in. So I'm a big believer in market efficiency. And most options, from like 70 to 95% of options, are going to expire worthless if you hold them expiration. That's why I like to be a seller. So most buyers of options are wasting the money, don't realize that there's another way to play the game, that since 1973, options have been a liquidity game. It's been a zero-sum game where a buyer wins, a seller loses, or a buyer loses, a seller wins. And that's the game. Okay. Sellers win way more than buyers. Expected moves are typically way bigger than actual moves. So when you're buying options and losing most of the time, stands to reason that sellers will be taking the opposite side of that trade, winning upwards of 95, 96, 97% of the time. This is how we've seen such a crazy edge in our trade. Over 550 trades for 12 years, 97.1% success rate. So essentially, we are selling options to speculators. So if you think about this like Vegas, if you're at that slot machine, pulling that lever, hoping to get lucky, you might get a hot streak. You might pull the slot and get a lucky payout once in a blue moon. But statistically speaking, the American Casino house edge is 56%. If you play any game long enough with those odds, you will lose all of your money. It is guaranteed. That's how casinos are built. So when you're selling options, you're essentially switching sides. You are now like the house. You are now like the casino, and you're collecting money from almost every transaction. And that is how, bull or bear market, we target this income every single week. Okay, third Monday in July, 1379. Monday after that, 2081, another undefeated month. So in all my years of trading, this has been like the most enjoyable, most reliable strategy for me to teach and trade. And I do think you're not going to see this type of steady returns anywhere else. If I have a 5K account and I put this in a high yield savings, if I want to set and forget it, just make me some money risk free. I understand that, right? 4 or 5 months of trading, Throw in 5K, it's up, $80 in 4 or 5 months. Put in the S&P for that 4 or 5 month stretch when the market's up almost 10%. Yeah, great return, $430. But if you use that as risk capital, you put that starting stake into the trade each week, like not even close, $26,000. Okay, I've got a bigger number to show you in a second. So, do you spend all week watching the markets? No. The trade's set up. The trade automatically has a take profit. You put it in the broker platform, it closes out. So way less time in front of the screens and more time doing the things you love. Okay. Is this risky naked options? Of course not. This is all risk defined. So to me, this is like a tap and putt on the golf course or shooting a little layup at the basketball court. Doesn't matter where you live. It doesn't matter who your brokerage is. If you have permission trade options, you can take this strategy. It doesn't matter how much experience you have in the markets. I will teach you how to trade waterfall income. So you can start using this income method right away. Same time, same trade, week after week. We have 2 strategies we talk about. I'll teach that in the master classes. So I'll show you everything you need for the groundbreaking income tool. And if we did this with a step-by-step video series and a live class, a one-off live class, we charge like $497 a la carte. But you can have that class and jump into my waterfall income service. Once you get into my master class, you jump in and see how clear-cut it really is. You can start using this technique right away, like clockwork. Follow the trade, take the same trade I do, get it locked and loaded, set the take profit. That's really all there is to it. Here's first Monday in August. Set up the trade, $9.55. Next week, same trade, same time, $9.83. These opportunities line up as we speak. Okay. So if you want to see how straightforward it is with your own eyes, then come check it out on a Monday session. We're live every Monday at 11:30 a.m. You can watch over my shoulder, copy and paste, know exactly what our reward and risk is, how the trade is being taken, executed, and managed. You can throw it in your own accounts. You can paper trade it. You can get the process down. Like just get comfortable. Nobody should be forcing trades. Nobody should be taking trades with money you can't afford to lose. But learn the process, and you can do this forever. This strategy is one of my forever retirement strategies. I will do this thing passively. Well, not passively. It's like maybe go from week to week to maybe month to month. But week to week still pretty good. It's really good, actually. So this is my most consistent weekly income service called Waterfall Income. This is what takes advantage of these weekly windfalls every Monday around noon Eastern time. This is what's allowed us to win 97% of our trades the last 12 years. And we have 110 winners